Hello and welcome to State of the Economy. Today we have with us a very special guest, Deputy Governor of Reserve Bank of India, Mr. SS Mundra, who will discuss in some detail with us on how the ambitious financial inclusion program of this government, in which RBI is playing a big role, is panning out, which is generally described as JAM, a combination of Jan Dhan Yojana, Aadhaar application, Aadhaar card, and the use of mobile phone, and how these three are expected to come together to create as somebody described, as a frictionless capitalist system, or a frictionless banking system rather. Welcome to our show, Mr. SS Mundra. So you are in a way in the on behalf of the RBI and also on behalf of the banking industry as a whole, since you govern all the public sector banks, in the forefront of this whole big experiment. Now, please tell us, where exactly is JAM, at what stage is it at the moment, what are some of the key issues that you are experiencing in taking it to the next level?
Okay, but let me just start with a small correction.
Yes,
we regulate the entire banking sector and not only the public banking. So Reserve Bank of India is the regulator for the entire banking and also part of the non-banking system. Yes, as you rightly mentioned, the JAM, as we call it, the Jan Dhan and Aadhaar and mobile. But actually the journey of financial inclusion started with the year 2005 actually, when Reserve Bank of India for the first time permitted the banks to use banking correspondent.
Sure.
And which laid the foundation, and then subsequently in 2014 the Jan Dhan came, which further accelerated the process. So now as the matter stands today, altogether we have around 600,000 villages in the country, out of which around 500,000 villages today are covered by the banking correspondents. Of course, not that each village has a banking correspondent.
And
but
we have what, 300,000 banking correspondents?
250,000
Okay,
roughly,
250,000.
because one banking correspondent serves more than a village. And we have around 125,000 odd brick and mortar branches, 50-60,000 are in villages. So that is the ecosystem which is created. I think the almost each household has opened an account under JDY. And some of the direct benefit transfer has started moving, particularly the cooking gas, and other things are in the card. Government is working on that. So that system is now in place. And going forward, then there are plans that the investment, insurance, pension, all those things should come. Where we are, I would mention 2 points. Number one, while the number of banking correspondents have increased and so much accounts are open, but if you look at the statistics, what we find that most of the accounts are still opened as those brick and mortar branches. It means each branch is having a very large number of accounts. And for any reason, if there is some weakness comes in the banking correspondent system, then these branches won't be able to really serve those many clients which are already sitting with them. So first requirement is to make this entire network very robust.
Banking correspondent network.
Banking correspondent. It means banking correspondent, there should be a controlling branch for each 25-30 banking correspondent, which should also take care of their cash management and other things. Second, to make the banking correspondent model itself viable, they should do more than one activity. That is, only if they are receiving and paying, probably remuneration would not be sufficient.
The costs will not get sort of spread across several activities.
So that is the other thing. The third important thing is ultimately the purpose of financial inclusion and all this is that the segment of the society which was excluded from the productive credit, they should be able to get the productive credit.
Exactly.
So you
take it to the unbanked, basically.
Take it to the unbanked, and when you take it to the unbanked, it should not stop at only opening their account or giving them some subsidy.
Sure.
That is important.
Which is the direct benefit transfer.
Which is the direct benefit transfer.
But beyond that, you should make them access services.
Agree, because while it is very important that the DBT comes to them, because it makes the account active and it creates their interest to further operate it. But let's understand one fundamental thing, DBT is not extra cash flow.
Sure. It's
Individual was already getting that benefit
whatever you are
one way or
getting,
other.
you're getting it more efficiently.
You are getting more efficiently. So this productive credit, because to give you a sense, I mean to say, if you look at our villages, as I mentioned 600,000 villages, now 85% of our farm holding is small and marginal farmers.
Yeah, less than 2 acres. Yeah.
And continuously fragmentation is happening. See, 70-71, the average land holding in India was 2.28 hectare. 10-11, it has become 1.15 hectare. 69% of the people have less than 1 hectare.
Yeah.
So, this being the case, until unless the further action is done to address the area of land fragmentation, pooling of land, more modern technique, the crop insurance, so that is one segment.
How do this has the potential to make, you're saying, agriculture more productive?
Agriculture more productive.
Yeah, by reaching formal institutional credit to farmers, small farmers, right?
Yeah, and credit alone, this is what I said, credit alone will not solve the problem. So they have to have
insurance plus various services.
Plus efficient, the total efficiency in production. So you use the technology for the yield monitoring or the soil monitoring or the pest monitoring, those kind of thing, weather stations, so that crop insurance become efficient. So whole lot of things required to be done.
Absolutely.
Similarly, if you look at the urban area, then this micro enterprises. There are such a large number of micro enterprises and they are outside the formal credit system or the banking system.
Yeah, you mentioned that there are micro small enterprises which barely 20% of them access formal bank credit, right?
Yes.
So tell me, I want to come in here on banking correspondents. You rightly said that the 250,000 banking correspondents, they need to be made more robust, and their activity needs to become viable, right? Now, tell me, at present, these banking correspondents are supposed to reach out to these villages, as you said, to make financial services more accessible. Now, is the costing working out? Because what we learn is that the banking correspondents supposed to take a handheld ATM. Now there is a cost of the ATM, capital cost. Then to make it worthwhile for the banking correspondent,
right,
as you said, you need a certain diversified services which the household would need to access. Now, therefore, in the initial phase, the government will need to subsidize it. So, are there enough fund allocation to support this 250,000 banking correspondents going to villages?
See,
in the initial phase.
No, it's all right, but I personally believe that any initiative or any model which is launched on the basis of subsidy really would not be very sustainable. So
banks themselves need to make it viable.
Banks should sense that it is a business proposition, and once that conviction is there that it is a business proposition and they work in that direction, I think that would be a right way of doing. And like any new business, initially whatever expenditure is happening should be considered more as an investment rather than as expenditure. You are investing for the future earning. That is how it is.
So here I want to ask you one thing here. The former finance minister P. Chidambaram, he wrote an article some time ago in the Indian Express where he said that every account which is effectively non-operational costs the bank annually some 200, 250 or 300 rupees, right? Now, if out of 19 crore accounts which have been opened under Jan Dhan in the last 1.5 years, the government data itself says about 43% is non-operational in a true sense. The accounts are there, but they are not being used. Now, can banks sustain a cost of 250 to 300 rupees per account in so many accounts, 7-8 crore accounts for how long? I mean,
no, I think it's a very valid and relevant question. That each account, when you maintain, there is a cost, and obviously, if account remains inoperative or dormant, this is certainly a drain. We have to see from two perspectives. One is when the first phase of account opening was over, and in first couple of months, there were almost 80% of the account which were inoperative. And when this campaign was going on, there was some skepticism also that these the people for whom we are opening the account, they won't be saving. But that 80% has dropped to 43% already in last few months, and people have started putting the money. So it gives one clear indication that even so-called poor people or low-income people, they want to save. There was no vehicle for that. That is one thing. But second thing, which you have to bring some trigger for initially. And I have always been telling this, that trigger could be a kind of more and more benefit. Ultimately, state and central put together, last time when this project was taken, I think there were 23 kind of various benefits which flows to the citizens. Not everything to everyone, but to different one. Some are state, some are central. Now, sooner all these things start flowing to these accounts, so then we can reasonably expect that in most of the account there would be some kind of credit or other, big or small. Now this is a human tendency. Once you start seeing the money in the account, then you spend something, then automatically propensity to save comes, then you want to see that your saving increases. So that becomes a trigger. So I think that should be the first step. You open the account, you bring some cash by way of benefit, and then of course the productive credit and all those things. To my mind, we have three kind of segment which is to be addressed in financial inclusion. One, those who are having the surplus, but they are looking for the avenue to use this surplus. So there readily you can provide them the investment option, pension option, insurance option. The second segment is who are having surplus, but it is not really big enough to provide any incentive to save a lot. So they need again productive credit to enhance the surplus. And third is the category who are just I mean to say subsistence level, who are not having any surplus at all. They also need the productive credit, so they start generating surplus. So is a medium to long term goal. It will be, these will be step by step. It will take some time, but that has to be the goal.
And sir, at what these 250,000 banking correspondents who are going to reach out to far-flung villages, as you said, and to make formal banking services accessible to remote villages, have they started functioning in the sense? Are they already going to these villages and exploring what kind of services that these households may need, etc.?
My sense is it is of course they are there. They are there, and many of them have a fixed outlet also where they cover 3-4 villages. But if you really ask that whether they have started reaching out and started offering the multiple of products, or even started offering a kind of giving some guidance to those customers, I don't think that is happening. And again, that will not happen on its own. I mean to say, banking correspondent on his own won't be able to do it. It has to be the strategy of the bank.
So what will it take for banks? Are you in conversation with banks on this?
See, is a business model for the bank, because this is all what is expected of them. We have given the framework. Now, the simple point is, you have invested money in this. If you don't do it, we have done something else. As you know, we have given in principle license to 11 payment banks, 10 small finance bank. They will become operational. They will also start
eating into the business of banks.
Competition.
So you're creating this competition.
So I think our rather than any kind of force regulation, competition is the best method to bring the efficiency.
Okay.
If you remember, I mean to say,
so you're hoping that many banks which today may claim that operating these banking correspondents is not so viable at this time, they may change their mind once they see competition coming from payment banks.
Yes. Not only that, if you look at
postal, the whatever.
Postal. They will have a payment bank.
150,000 plus post offices around they will also compete with the banks.
They will compete because they have been given a payment bank license. So of course, payment bank won't be in the space of providing credit, but they can always be engaged by the other banks which can provide the credit and act as their correspondent. All those possibilities are there. So, it's going to be a very exciting area. And when you talk about the competition, I am not talking about only these people who are about to come. Some of the banks which were
themselves will start
which have come into
pushing
existence,
the envelope,
which have come into existence in last 15-20 years after the we opened up the licensing process. Some of them have done very good work in the area of this microfinance and small ticket, and they are finding as a business proposition. So the short point is, I think all the players in the banking system has to become aware that there is going to be a much enhanced competition. And for the sake of business itself, as a business proposition, they have to be attentive to it, not as a matter of only compliance.
But sir, some critics say that at the moment this whole scheme which the government has come up with is essentially being pushed through public sector banks. And I know that you regulate the entire banking sector, but the private sector banks are not so enthusiastically coming forward, setting up banking correspondents, etc. So the costs, initial costs are being borne by the public sector bank, which has always been the case. Even in the past, if there was any social objective, it was always the public sector bank should come forward first, right? So is that what you are seeing, at least at this stage?
See, in a sense, number one, for the public sector bank, government would have some role as the owner.
Exactly.
Which would not be the same for any other segment, and for us, we say as a regulator, we will be the sector neutral. See, always I mean to say, for any public institution, there are always some cost related to the public policy goals and public goods. That differentiation to begin with would always be there.
It's always there.
Yeah, but since there are business opportunities in this, then one has to develop the model to see normally what happens, and that in the initial stage when there is expenditure, these institutions don't develop that model that they can reap the benefit, and when it comes time of reaping the benefit, they lose out. So that is a business sense which they should understand.
They should understand. Mr. Mundra, another question that comes to mind is, when this competition, this full-blown competition comes, and as the Minister of State for Finance, who was in conversation with you just an hour ago, said there would be channel neutral kind of banking system where mobile companies will be participating, small finance companies, post offices, and they all will attempt to reach out to the last man, to the unbanked, and try to create a business model out of it. So how do you visualize the whole space, financial sector space, say 3-4 years from now, if indeed this happens?
It will. I think the kind of groundwork which has been prepared, and the way technology is now, technology has become a great enabler. So I think it is quite in the realm of possibility, provided all players, all actors don't lose focus on it. So this is very much doable. It will be quite an exciting place. I would only have one word of caution, and I think we would also be sensitive to that of course the big country, target group is too big. There is, I think, enough as of today for everyone to have the share of the pie, but it should not become that too many overzealous lenders are reaching in the space.
So is there a risk of that?
And then it ends up in the end user getting over indebted. That is something which really we would be sensitive to, and it will be engaging our attention.
Because if it's a case of supply creating more and more demand, then there could be a problem, right?
I would feel worried about two things. One is about the over indebtedness. Second is the mis-selling to these people. Now, another risk is, after a long time, with all persuasion and great difficulty, these people have come into a formal banking sector. And suppose if
That
they,
itself is a big achievement to begin with.
big achievement, but initially itself if they have a adverse experience and suppose they again retreat,
So as a regulator, you have to be very careful about that.
we have to be careful. Then it will be very difficult to get them back.
It's a bit like how the middle class experienced some of the insurance schemes like ULIP.
Right. So
The product itself got discredited.
so that is why we have to be sensitive. We have to be alert about it. But we have that
So
awareness.
another issue as a regulator and as a banker yourself, you've been the head of Bank of Baroda, and all your life you've been a. How do you see the focus of our banks today? How can you focus them towards in this direction, financial inclusion and whatever that you've said so far, at a time when banks themselves are under a lot of pressure, their balance sheets are stretched for historical reasons, for the kind of NPAs that they have, kind of restructured assets, plus the kind of lending to SEBs. I believe altogether is now 13% of their outstanding credit. So, and public sector banks particularly, if not so much private sector banks, in such a situation, would it be difficult for you to get them to focus on this, or would they want to first set their house in order? How do you see things panning out?
See, as we also know, both of us as an individual, that things in life never come in series, one by one. Things happen parallel, and I think that's a great lesson even for the organizations. See, there are several reasons about where we are, NPA issues, that the infra, and then so I am not going into that.
Because the mind should be free to
Right.
focus on these things, right? So
But the very right lesson to be learnt is that this model in which the credit concentration was there,
absolutely.
and the huge exposure can also be very painful when the trend is reversing. So it's important for the banks to have a diversified business model, and this is a diversified.
So this, in a
business
sense, will create a diversification. I want to tempted to ask you this piece of statistics that I read somewhere, that all these small and micro and medium enterprises together, the bank lending to them is about, I'm told, is about 5.5 lakh crore, whereas for the top 10 big business groups, it is more than 5.5 lakh crores. Do you see a big skew here? Since you spoke about small enterprise also being an essential part of financial inclusion,
No, right. I agree. See,
imagine the entire sector getting 5.5 lakh crore of outstanding credit, and just 10 big companies accessing about outstanding over 6-7 lakh crore.
some issue is there, but it is not as simple as black and white. There is always a big shade of grey. First thing, the finance to so-called MSME sector around the banking industry is around 16% average, I think so. So 16% would translate into something like 10 lakh crore. That is what it will translate into. Only thing, this is one activity which banks have been doing for so many years. They were typically the lenders of large ticket advances, whereas the lending to MSME relatively started a bit late. So that is one reason for it. But having said that, yes, typically what happens, it is easier. Ultimately, everyone is driven by a business figure, and then there are goals. And in great days,
So
good
it's more
days,
tempting to give it to big
yeah,
guys.
at
so
good
that
days
you
it was
you
always
increase your
looking
loan book
easier.
overnight,
Because ultimately the level of effort which you have to do, whether you are dispersing a big ticket or a small ticket,
It's the
it
same,
is not significantly different. It is different, but not significantly different for many processes. So, but I think this is what one has to learn from the past lessons.
Exactly, and as you said, it will give great opportunity to diversify this financial
This
inclusion.
is, and that is where the business proposition is.
Thank you very much for talking to us, Mr. Mundra.
Always.
That's all we have in this edition of State of the Economy. We'll be back with you next week. Thanks for watching.